Is buying the dip still smart, or are investors just chasing ghosts? Steve Sosnick dissects the market's FOMO frenzy, where every dip is met with a buying stampede. But is this strategy running out of steam?
I understand it. You know, it's human nature to not want to miss something, and it's also career damaging if you're an institutional investor and you miss a rally.
Yeah, no kidding.
So you don't want to be
left
that
behind.
You don't want to be that person. You lose your job or you don't get a bonus or whatever. So that is an element of it, and I think that's what drove the market so far up yesterday. I think we started to see people pyramiding on top of the rally because they did not want to miss another dip opportunity.
Okay, so if that was our dip, it was not much of a dip. And I guess that's where you get to. Buying the dip is still alive and well. People buy it before you can even really realize there's a dip.
My analysis there is that the half-life of dips is getting ever shorter.
Yeah.
And I think because people are so afraid of missing the dip, they basically rush in at the slightest sign of one.
Oh my gosh, the market's 1.5% below an all-time high. Buy.
Exactly. But what happens is, you know, it's worked so well. Let me be fair. It's worked extraordinarily well. If something works really well, you're going to keep doing it. And the more you keep doing it, the more it reinforces itself to the point where the dips get ever shorter because no one wants to be the one who even sold before the dip.
Right, because then you look foolish. So I guess what it takes is being proven wrong at some point before people get a little afraid of trying to reach out, buy the dip, and then potentially catch a falling knife.
Well, that's kind of what we're seeing. Yeah. You know, in our most recent report of the most active stocks on our platform, the two stocks that saw the most net buying over the past week were UNH and Novo. And, you know, so that's when you have to sort of question, because
UNH and Novo Nordisk have both had a particularly rough time over the last year or so.
Exactly, and specifically over the last week or so with bad earnings. And so they both had big drops. They're both household names. And so people rushed in to buy them. And there you really haven't seen it. It does work a lot. It seems to be working a lot better with tech stocks than it does with healthcare.
Okay, so that's what I was going to say. How do I figure out when it's a great opportunity to buy the dip and when I'm at risk of catching a falling knife?
You're always at risk of catching the falling knife because the one time it'll seem perfectly foolproof. Because remember, the market has a way of making the maximum number of people wrong at the most inopportune time.
Right.
And so what does happen there is you want to be judicious. You want to be doing it for a reason. Don't do it reflexively. If you really think that this company has a value, there's something to it, that's great. If you think that you're just doing it because the stock is lower and therefore reflex tells me I should be buying, maybe you want to do a little more analysis and a little more thinking before you just react.
So Figma has only been trading for not even 3 full days at this point. I know the IPO was last week. I watched it. And I still have a hard time believing it when you see every statistic that it's hit along the way. Where has it jumped in terms of your screens?
It's fascinating because on a rolling 5-day basis, Figma is the number 4 most, as of this morning, as of yesterday's trading, was the number 4 most active stock on our platform.
Without even having 5 full days of trading.
Without even having 5 full days of trading. So call less than half of the time of that measured in that data. Figma's been a public company. And it's been steady net buying. Interestingly, the net buying increased each day. So, you know, obviously the first day was net buying. Then the second day was net buying of even more. And as we fell yesterday, there was even more net buying. So people have just been continuing to love the story. And interestingly, Circle, which is sort of the prior version of Figma, fell from like number 8 on the chart to about number 20 on the chart. So people, I think, have been moving their attention from the last hot IPO to the new hot IPO.
Yeah, new flavor of the day.
Exactly.
Steve, thank you very much for coming in.
Becky.
Steve Sosnick.